Kia ora and welcome to Retail Unplugged, a series brought to you by Retail NZ. Grab a coffee and take a break to join me, Carolyn Young, Chief Executive at Retail NZ, while I chat with Warren Ngan Woo from Westpac about financial wellbeing and managing your mortgage. Warren likes to be known as Wazza, so welcome, Wazza. How are you going?
Yeah, good. Thank you. Kia ora, talofa to everyone. How are you going?
Excellent, excellent. Now, look, you've got a really complicated title in your role. Can you tell us a little bit about what your role involves?
Yeah, absolutely. So the official title is the Program Manager of Financial Wellbeing for Institutional and Business Banking. So a really long title, but really in essence, it's all about building financial capability or financial wellbeing and also supporting customers, whether they be with Westpac or non-Westpac customers, as well as whether you're in the community or in schools around financial literacy and just trying to build that capability around financial knowledge and that sort of space. And our program that we run is called Managing Your Money, and it's free for anyone to access. So it's really cool.
Amazing. That's fantastic. So Wazza joins us for 4 episodes around managing your money. And today, as we said, we're going to talk about mortgages. But firstly, I just wanted to have a quick disclaimer before we begin that today we're going to give you some general information only. We're not providing advice. If you want advice, please speak to your personal financial advisor for advice tailored to your personal situation. Or with regard to mortgages, get in touch with your mortgage broker or your mobile mortgage manager from Westpac. But first, I guess let's start at the beginning. What sort of types of mortgages are out there, and how would I know what would be the best mortgage for me?
Yeah, great question, Carolyn. And often, here in New Zealand, there's pretty much just a small group of types of home loans that we have. And the real traditional one is a fixed home loan. And usually a fixed home loan is great for those who might want to have a fixed portion for a fixed period of time and they know exactly what that payment is. So really good for people who have a budget. And like we spoke about in some of the other episodes around having a budget or money plan, they have the set payment, they know what it is, whether it's fortnightly or monthly, they stick with it. And then you got floating as the next sort of second popular sort of loan type out there. With floating, the difference between fixed and floating is that the fixed rate is fixed for a period of time. The shortest time you can have in New Zealand is 6 months, and then the longest is 5 years. There was a time where we tried to introduce 10 years. I don't think it was us, but another bank had tried to introduce 10-year interest rates. So that would have been interesting if it had taken off. And then we've got floating. With floating, it's an interest rate, but based on that floating rate, that will fluctuate. So it'll go up and down depending on the term of the loan, and then it gives you flexibility. It just means if you're coming into a bit of money or you're making a little bit of money or you're maybe getting an inheritance and you think, I actually want to use that to pay that portion of my loan off, then that can happen and there's no fees or penalty and stuff. And then you've got the others, which are predominantly like a revolving credit. So often the best way to describe it is like having a big overdraft on your account and usually having a revolving facility. Quite often people use this if they're building properties
Yep.
and looking to draw down funds. So the bank will give you a limit, say $100,000. Of that, you just keep paying X amount to your builders, you get an invoice, and then you're only paying, the payment based on the amount you draw down. And then the other big one, or the other one that seems to be popular, is that people like doing offset. So those who might not use all their deposit for their house, who might have a little bit of cash left over, they'll use that to offset the loan amount that they'll have. So if they've got, say, a 50 grand home loan offsetting, they've got maybe 10 grand cash, that using that 10 grand cash to offset that 50 grand. So they're only initially paying only 40 grand of interest compared to paying the full 50 grand. So lots of options. And those tend to be the four main ones here in New Zealand.
So, the interesting thing about mortgages is that, you talked a little about having a fixed mortgage and various things. And when you go in to set your mortgage up, it's based on that point in time. But
Yeah.
sometimes our circumstances change or we might need to get some cash or something. What can we do if our circumstances change and we kind of feel like we're locked into a mortgage for 30 years?
Yeah, that's a really great question. I remember being a home lender back in the days, and quite often that was the $1 million question. Is like, hey, Wazza, how should I structure my loan? And nowadays lenders are more so having that conversation and diving deeper into making sure that, hey, what are you planning? Like this is now, but what are you looking at in the next 5 years? So really important. Anyone getting a home loan, maybe you're looking at starting a family, maybe you're looking at maybe going overseas for a period of time. maybe you're looking at wanting to purchase another property, like an investment property, you need to inform the bank or the broker or your mobile mortgage manager, and they'll step you through that process going, okay, cool, you can structure it like this. And again, we can't give you direct financial advice, but they'll sort of discuss with you, hey, here are some options. This is what's happened before with other people. This might look familiar to you. It's over to you. And so, yeah, just get people to ask and say, hey, this is what I've got. Because you're right, Karen, and everyone's situation changes. And even in that, life happens. So
Yeah.
something might drastically happen to you. And, at the moment, we're seeing that sort of play out a little bit with the, tough environment. I think I saw, wasn't there someone talking about the news the other day that those who brought in the boom recently, from the recent boom, they're looking at maybe reselling at a loss. So just got to be mindful when you're coming into buying a house. It's a long-term game, right? I always say it's a long game when you're buying a house. People have different views and values in it, but New Zealand, traditionally people buy a house to feel secure and safe, just making sure they're grounded their roots in that space, and they're there for the long term. So bringing it back, just ask and talk through your broker or your mobile mortgage manager on, hey, this is what I'm looking at doing. What does it look like if I need to maybe put a portion on fixed, maybe have some on sort of floating? Because it really depends if you've got your prospects with your job. If you're maybe getting a bit of a increase in your salary over a short period of time, then maybe the option is that, hey, you don't put all of it on fixed. Maybe you put a portion on fixed and portion on floating, because then you'll have some cash to pay down a good portion, which would then mean overall you'll reduce that 30-year term and you pay less interest, which is a strange thing for me to say when I'm representing the bank. But you know what I mean, team. I know everyone is always, and we want people to pay their loans. So that's one thing I want to mention, is that the banks do not want you not to pay your loans. We always encourage you guys to make sure that you're setting it up in the best way possible.
Fantastic. And look, I guess one of the really topical issues right now,
Mm.
someone's mortgage is coming up for renewal. How do they, make the best decision around how long to set it for, whether to be floating? Where would they get that support and advice?
Yeah, absolutely. And go and talk to your bank, talk to your broker, talk to your mobile mortgage manager, because they're financial advisors. So they're able to give you that real expert advice around giving you the right knowledge or the right circumstances to help you support on what your decision making is, so that you can make an informed decision on what you might want to do. Interesting. I was reading or listening to some sort of articles, and what's happening at the moment, because a big portion of New Zealand's home loan books are all fixed. And,
Mm.
at the moment, there was that concern and worry that we were going to, off the cliff with the fixed loans, that everyone was going to jump from the short, smaller rates, like 3% through to, doubling at 7 to 8%. We haven't seen that happen as much, but what we're seeing is that the article talked about how people are hedging their bets. They're going, okay, cool, we're going to fix for short term, hoping that the OCR is going to, eventually drop. There's a big portion of New Zealanders who have fixed their loans on short terms, hoping that interest rates so there'll be fixed terms are usually that 1 to 2 year period. So hopefully that's well, my hope is that could pay off for everyone, and then that could benefit with maybe lower rates in time. But again, it's all subject to change. I just want to throw that in there. But again, talk to your advisor. They're the best person. Don't talk to your neighbor, because your neighbor is probably going to give you the incorrect advice. Talk to someone who has the knowledge and the know-how, and that is your bank, your mobile mortgage manager, your broker, and stuff. So yeah.
So to get more advice, go to westpac.co.nz, search home loans. You can do your own research online, or get in touch with a Westpac mobile mortgage manager, and they'll send you, they'll get in touch with you and be able to give you the right advice for your circumstances. You'll be on the way to getting that mortgage paid off sooner. Look, thank you
Yes.
so much for joining us today, Wazza. It's been really great pleasure to speak with you and hear how Westpac is supporting the retail sector in New Zealand. This is the third in a series of 4 episodes around taking care of your financial wellbeing. Please tune in to other episodes where we discuss spending and budget setting and planning the future. Thanks to Westpac, Retail New Zealand's principal strategic partner, whose support enables us to keep up to date with everything retail. Thanks for taking a few minutes out of your day to join Wazza and I hope you enjoyed your coffee break and you found this episode useful. And finally, don't forget to subscribe to Retail Unplugged on our preferred channel so that you can keep up to date with all the current industry knowledge. But until then, ka kite anō, bye for now. Kia ora.
Ka kite.